Hello everybody, I'm John. This is JP Strategic Investments, and today I'm going to go over the perfect strategy, in my opinion, for Rocket Company stock right now. So first of all, I'm going to go over what the option strategy is, how it actually works, and then I'll go over why I think Rocket is the perfect stock for this strategy right now. And it does have to do with their recently disclosed buyback. So let's get into it. The strategy that we're going to talk about right now is the wheel option strategy. So if you haven't heard about the wheel, it is a little bit more of an advanced option strategy. So if you're new to options, if you don't have a lot of experience with options, this might get a little confusing, but I'll try to break it down as best I can, just for those of you that may not understand a lot about options. So the first part of the wheel strategy is actually selling a cash secured put. And basically, this means you're selling a put, but you have the cash set aside if needed to be able to purchase those 100 shares that are within that options contract. Remember, every options contract represents 100 shares. So you're selling the put, which means you're opening up yourself to the possibility of being assigned on that option, but you have that cash set aside in case you do get assigned to actually go and purchase those 100 shares. Now, you don't really want to get assigned. You don't really want to actually have to purchase those shares. The idea with this is you're selling that option, gaining the premium, and then you go and you sell another option. And this can be done every week, this can be done every month, every 2 months, depending on kind of how far out you want to open yourself up to and what exactly your strategy is with the particular stock. In this particular scenario, what I'm doing with Rocket Company stock is I'm selling monthly options. So basically every month I will sell a certain amount of cash secured puts on Rocket Company stock at a price, and we'll get to what price that I'm actually selling it at in a second. And then every month, as long as the stock doesn't drop below that price, I just collect that entire premium for that option. And we'll get into also how much I'm collecting every month. So that is how it works. Now, the idea with the wheel strategy is you really don't want to get assigned, but if you do get assigned, that's where the wheel strategy can really be beneficial. That's where it really starts to kick in. And because of that, with the wheel strategy, what you really want to do is choose a stock that you wouldn't really mind owning, and specifically one that you wouldn't mind owning at the price at which you're selling those cash secured puts, because that's the price that you're going to be assigned at if you do get assigned. So you want to pick a stock that you wouldn't mind buying at that price, and you wouldn't mind buying those 100 shares or 200 shares or however many contracts you're selling. So that's the idea there. So what happens if you do get assigned? Well, in the wheel strategy, what happens is if you do get assigned, then you would take on those 100 shares, you would purchase those 100 shares at the strike price at which you sold the puts, and now you own those 100 shares. And what you're going to do now is you're going to sell a covered call. So you own those 100 shares at, let's say, $18. You might sell a covered call at $19 or $20 or something like that. And then what that means is as the stock moves up, you're gaining money on those shares. And if the stock moves up all the way to the point at which that option, that call option that you sold, or call options are in the money, then you have two things that you can do. You can either push those options out further, so buy back the calls and then sell calls even further out if you want to continue owning those shares, or you can just let those options expire in the money. Those options would be exercised, your shares would go away, you'd sell them at the strike price at which you sold the call options, and now your position is entirely blank. You don't own any shares, you don't own any options, anything like that. But theoretically, you made money on the premium from the put, probably made some money. If you didn't, it got you those shares and you're about even there. Then the stock moves up, you make money on the way up, and you could possibly even make some money from the covered call or calls that you're selling as the stock moves up as well. So all around, it's a pretty great strategy. Now, the one real risk with the wheel strategy is a stock that could potentially make some large moves to the downside, because the wheel, while it is almost a multi-directional strategy, it's really used in this sense a bullish strategy. You really kind of want the stock to either stay where it is or go up. That's kind of really what you're looking for, especially when you're starting out selling those puts, because if you sell a put and a stock drops down dramatically, just really quickly, drops right through your put, you are going to lose some money there, and you could lose a decent amount of money depending on how far that stock drops. So you do want to be careful in that you don't choose stocks that have a lot of downside risk. And this is where we get to why Rocket Companies is really a really great stock for this strategy right now. And so the main reason for this is what they announced in their last earnings report. Now, if you watched my last video, or if you listened to the earnings call and checked out their 10Q for their last quarter, you know that they did actually start buying back shares. A few quarters ago, they announced a $1 billion buyback program, and they hadn't really bought back any shares at all, actually, up until this May. And they disclosed those trades here in their 10Q. So you can see here in the month of May, they purchased almost 500,000 shares at an average price of $16.73. And that totaled to just over $8 million or so. So not a huge amount by any means from Rocket here. You can see just under this kind of chart here, there's a line that says they still have approximately $991.7 million left to use in that repurchase program. So they did not by any means go out and use a lot of that repurchasing power. Now, what this tells me though, and the main thing that I think is important here for investors is we now know that at 1673 or somewhere around there, Rocket is confident enough that their stock is so undervalued that they're willing to go out and buy more shares. And what this tells us and what this allows us to do then is we know that there's going to be strong support for the stock at that level. So it will very likely not drop too far below there, or Rocket will really start using up their repurchasing power, and they have a whole almost $1 billion left to buy back in that program. So that tells me they're probably not going to let the stock drop really too much lower than that level, because they'll just keep on buying it until they use up that $1 billion that they have left. So if we look at the chart here, the month of May is pretty much from right here to about right here. So you can see where the stock really dipped down here is really where they were buying. So if you look at the price here, 673, I've drawn this red line here. That's where kind of the major support is. So that's where they were buying these shares, really at kind of this all-time low here, aside from this one day in late July here. So that is where we know there's going to be really strong support. Now, what this does for us with the wheel strategy is this kind of tells us, hey, this stock doesn't have a lot of downside risk. So selling those cash secured puts is really a great strategy in this case, in my opinion, because there's not a lot of downside risk, and you could really continue to sell those cash secured puts and even move them up from that price, that around that 1673 level, as the stock moves up. So right now, if we just take a look at the options available for Rocket Companies, if we look at that 1650 strike price, the 1650 put, and we look 1 month out from today, so September 24th, that you can actually sell right now for $37. Remember, for those of you that aren't quite familiar with options, everything is pretty much multiplied by 100 here when you're looking at the price and other metrics with these options. So that right there is $37 that you could sell this 1650 put for. And what that means is that unless the stock gets below 1650 within the next month, you collect that entire $37. And the other thing about the share repurchase program is, let's say the stock does, for whatever reason, get down to that 1650 level, I'm completely fine owning those 100 shares or 200 shares or however many contracts that I want to sell, because I know that around that price, Rocket is going to be buying shares. So again, there's very little risk to the downside, in my opinion, because of this, especially because also I think the stock is really undervalued at this level as well. So I'm totally fine owning those shares. I'll go and sell the covered call, and what I would do actually, if we're looking at where I would sell this covered call, I would probably sell the calls at kind of the next level, next major level of support. So I'd probably sell them maybe around the $18 level. And that would give me kind of $1.50, or if we're speaking in terms again of multiplying this by 100, that would give me $150 of gains if the stock were to get all the way back up to that $18 level before that option would get in the money. So for every contract that I sold, if the stock rises back up to that $18 level, I would be making $150 per contract on top of whatever money that I'm making from the premium on those call options. So if the stock takes 5 months to get there, and I could theoretically get somewhere around the same, let's say I get $30 for all of those options, I could be making another $30 per month as I'm making money on those shares increasing in value from those call options. So really, that's why, I think this is a great strategy right now for Rocket Company stock. We got really not a lot of risk to the downside, in my opinion, with the share repurchase program in effect, and now being able to see exactly what price Rocket is buying back their shares at, so we know what level that support is going to be at. This is why right now, this is what I'm doing with Rocket stock. I'm selling those cash secured puts at that $16.50 level, and currently I'm making about $40 per month per contract on those options that I'm selling. So if you have any comments or questions or anything like that, definitely leave those in the comments below. And if you did enjoy this video, if you did find it helpful, don't forget to hit that like button. Other than that, I will see you guys next time, and have a great day.